Buying a detached home in Toronto is a dream for many people, but it also can come with a huge financial commitment. With the average detached price now hovering around $1.45 million, the big question is, what kind of income and liquid assets do you actually need to have to make that purchase happen? Welcome back to Real Estate Simplified. I'm Ally. I'm the co-owner of Home and Capital Realty. And over the years, we have helped so many clients build lasting wealth through real estate and move into their dream homes. And in this channel, I break down complex real estate concepts into plain English so you can make confident decisions whether you're buying a home or building generational wealth. And that's what I'm going to break down for you today. We will talk about cash needed upfront, the income lender expects you to have, and some key realities of stress tests that you need to know before making plans. Let's jump in. Now, before I get into the numbers, I want to be clear about a few assumptions. Every calculation I'm sharing comes from actual published resources. Things like the Government of Ontario for land transfer tax, the City of Toronto for property tax, OSFI for mortgage stress test rules, and posted rates from the banks. To keep things simple, I'm using clean file examples. That means I'm assuming there's no monthly debts and that you're buying a freehold home rather than a condo, and that your assessment value is close to the purchase price. Lenders may apply different heating or tax estimates, and mortgage rates change all the time. So the numbers I'm giving you today are accurate as of today's condition, but you would want to double check with your own lender or broker to see how they line up with your unique situation. Let's start with the money that you would need on day one. If you go the conventional route with a 20% down payment, with the average house price at $1.45 million, you're looking at about $290,000 for the down payment. On top of that, you will pay land transfer tax to both Ontario and the City of Toronto if you're buying in Toronto. Each side is about $25,475 for a home that is about $1.45 million. That's just a little bit over $50,000 in land transfer tax. But keep in mind, if you're buying outside of Toronto, you're only paying the Ontario land transfer tax. So the number will be half of the number that I gave you. Then you've got the legal fees, title insurance, and a few small closing costs, which usually add up to about $1,000 to $2,000. In all, your upfront cash requirement roughly will be about $342,000 to $345,000. If you want to try the minimum down payment with a insured mortgage, the math changes. Now, at this point, the minimum down payment is actually $120,000. Then you have to add mortgage insurance, and the insurance premium gets tacked into your loan, and then it will be like $53,000 in this case. And you will owe HST on the premium at the closing. Combine that with the same $50,000 in land transfer tax, so your cash to close end up to be a little bit over $170,000. And now let's talk about income. Lenders qualify you by using something called the stress test. Right now, the rule is that they will use the greater of either 5.25 or your actual rate plus 2%. With today's posted 5-year rate in the 4.25 range, you are stress tested closer to 6.5%. And they're going to check your gross debt service ratio. Basically, your housing costs compared to income stays under about 39%. So what does that really mean in practice? With a 20% down payment and a conventional 30-year mortgage, you will need a household income of around $265,000 per year, assuming no other debt. If you're doing the minimum down payment with mortgage insurance, your income requirement jumps to roughly about $317,000. There is one small break here. If you qualify for the new insured 30-year amortization available for first-time buyers or pre-construction homes, then your household income dips a little bit, which is going to be around $300,000 per year. We're still talking about a pretty high household income here. So here is the bottom line. If you want to buy a detached home in Toronto at today's average price of $1.45 million, you either need about $340,000 in cash and an income around $260,000 to $270,000, or a little bit over $170,000 in cash and an income north of $300,000. That's the math under the current rules. And of course, not everyone's file is the same. Some people have other debts, and some will buy condos with lower land transfer tax, and some will qualify for different mortgage products. But this is approximately the amount of cash and household income needed to purchase a detached home, averaged around 1.45 in Toronto. If you're planning to buy, make sure you sit down with a mortgage professional to run your exact numbers. And if you want to understand how property taxes, insurance, and utilities all stack up once you own, check out my other video on home ownership cost in Toronto and the GTA. And as always, don't forget to click that like button and subscribe to the channel, and we will see you in the next video.